This is King World News. I'm Eric King, and you're about to hear our exclusive weekly metals wrap with Ted Butler. Remember to go to our homepage at www.kingworldnews.com for more interviews. Well, this week we have an incredibly important interview with Lord Christopher Monckton, former advisor to Margaret Thatcher. Lord Monckton's speech in the United States on the Copenhagen Treaty has become famous, and you will hear a brief clip of that speech just before the interview. We also have an incredibly riveting interview with Nigel Farage, national spokesman for the UK Independence Party, who gives listeners a glimpse into our future. We also have Dr. Mark Faber, editor and publisher of the Gloom, Boom, Doom newsletter, as well as Jeffrey Sout, chief investment strategist from Raymond James. As a bonus interview, we will have Congressman Ron Paul and his son, the future senator of Kentucky, Dr. Rand Paul, interviewed together, and that will be released on the site by late Saturday or Sunday. Joining us now is Ted Butler. Ted, kind of a wild ride here on the metals, and you've been warning, hey, we can get these kind of shakeouts or drawdowns or corrections and reactions in the price of these metals, and sure enough, here we go. You said if and when the smash comes, it's going to be COT related. We're seeing some of that now, down $30, over $30 on gold for the week, about $1.30 on silver, so certainly good action to the downside. Did we get anywhere as far as cleaning out the COT commitment of traders? Where are we on gold and silver?
Hey, Eric. Well, we did improve a bit. I wouldn't call it a strong improvement or a deep improvement in the commitment of traders that was just reported now. But this report, again, is as of the close of business on Tuesday. We did have a big down day on Tuesday, and subsequent to that, almost every day, it seems, since the cutoff. And what that means generally, I don't think it's quite caught up. So you don't want to look at the actual commitment of traders released today too rigidly. You want to allow for there's been further improvement. We've stopped deteriorating. The commercials are pulling in their short positions, covering. We've been down 7 days in a row for silver. We've been making slight new lows. My friend Izzy calls it slicing the salami, where you make a new low almost every day, and what that does is it induces the technical funds to sell and liquidate, which is the whole game, and the commercials come in and buy it back. So we are very much entrenched into the liquidation cycle. You know, I talked about in silver, we could see a $2 or $3 drop. That risk was always there. We've seen $2 in a little more than 7 trading days, and I'm thinking that we're closer to the end of this liquidation cycle and the price decline than we've been before.
Let me ask you very quickly, Ted, because one of the things I've always been able to count on for the last, 8 years or so is not what came out on Friday that's going to tell me what's happened last week, but where Ted thinks we are this week. Meaning, if we had to have you bet on what the commitment of traders is going to look like next Friday, where would you say we are? And I'm asking you to speculate, obviously, but where would you say we are on a percentage basis on gold and silver in terms of the liquidation?
Well, we're still pretty high overall, but we've come down in this last few days and since the cutoff. And I'd say that we've improved another 5,000 or 6,000 contracts in silver and more than 20,000 contracts in gold. We still have Monday and Tuesday yet to go, so I'm guessing on a guess ahead. But the liquidation is, as I say, well entrenched. It may go further in gold, and that may pull the silver down a bit, but because the gold hasn't touched or violated its big 50-day moving average, which is hovering just above the 1100 mark, or pretty close to it, whereas silver, we've been trading below the 50-day moving average for 4 days running and making new lows just about every day. So the liquidation cycle in silver at this point is more advanced, more washed out at this point than it is in gold, and we have to start thinking in terms of a bottom.
What about in percentage terms, very quickly? Just asking you to speculate.
That's a tough one. I'll answer it. I'd say we're, if we were at, 100% in gold, we're probably down to 80% now. If we were close to 100% in silver, we're probably down to 70% now. I do want to caution that the commitment of traders is not the same analysis, doesn't go into the commitment of traders as it did in the past, because there's been so many other prevailing forces taking place that, we never had really a screaming commitment of traders traders' buy signal since July in silver, and yet we've marched upward in August and September and October on without a big commitment of traders or a very bullish commitment of traders structure. Even though the commitment of traders structure is not that bullish right now as it has been in the years past, I think that's because there's a lot of other major forces going on: physical market, political developments, regulatory developments.
The market has changed. It has.
Absolutely.
Okay. Let's talk about the price action.
Well, as I said, you don't get off in 7 trading days down in a row in silver and probably close to that in gold. That stands out on the charts. We are getting into